market delivered the last piece of information that matters, at least the unemployment claims. We have also existing home sales and the Philly Fed manufacturing. Trump also speaks, but we care about the unemployment because we are tracking especially how it was going down and the jobs were going up. But as you can see, the forecast was 224 and we came a little bit lower, but still higher than the previous. So this is not very good news for the dollar, that it's been taking hits. And after the Fed kept the rates the same, this is not a good panorama, at least short term, for the dollar. And as you can see, market is already pricing in. I mentioned this area as the only inefficiency we have currently in this bull run that broke the previous all-time highs after this major range area. So it's been testing, but as you can see, it's acting as a very strong support. So you need to keep it marked and with an eye here in this area, because usually Fridays provide some reversals. So we can expect something. At least if we get the reversal, we can see something retesting again this area, because sometimes, and especially right now that it's almost end of the month, we might have some closing of positions or futures or options might expire. So liquidity will go on the reversal, because also some big investors or important players like central banks will want to get another bull run, but at lower prices or cheaper prices. So you only have two zones, that will be the 3026 and 3022, because 3000 is our main area, but we'll get pretty much tested. If we get to this zone, we'll get tested and we will get to the orange area first, because there's a lot of liquidity below the 3000 area, not at the exact number that will be around here, that we have some I guess order blocks. I don't know how, everyone is flexing terms, new terms every time to time, but the reality is the liquidity is sitting, we could say, even a little bit higher, more or less here where we are having wicks. This is the 2 hours. So pretty much if price keeps going up, don't expect anything but new all-time highs, at least until the Federal Reserve provides new rates data, or inflation shows some moderation. That it's been showing. As we can see, we had the previous numbers are going kind of good because it's going down, but still the narrative is that gold remains very bullish compared to the dollar. But also we have geopolitical situations that are triggering the effects of mainly the USA debt is what is concerning the big investors or the big players. That's why the bonds are not very attractive and also are going lower. So for now, try to position yourself smarter. I continue working only with my only buy model. As you can see, it's doing very sweet, very soft, very low risk. There's no need to add currently the sell model. I prefer to add all this data. I'm working already with this range that will be the last piece of information, at least for March, because market per technicals needs a retracement. Price need to exhaust some of the move that it's been playing since at least beginning of March. I'll say it's pretty much February, but since beginning of March, price is just going up and breaking all-time highs. So we need to retest at least some of these areas, but the strong pressure of this support is avoiding those retracements. We already had this one that pretty much adds up to the previous move that we had in this orange area, but still, for the market to be more healthy, we need for technicals a retracement, but for fundamentals we're very strong as gold as an asset. So try to position yourself smarter. You can take advantage of every retracement, especially when you see these type of candles that are during news or during it's been during London also. I mentioned in previous videos that London is showing very big moves. It doesn't matter if it's to the downside or to the upside, it's showing very big pressure. So a lot of activity. It's geopoliticals also adding to this situation. So just keep your charts marked. I recommend you to especially track this area if you're trying to buy again, because here is really no one's land. And it's not very smart to try to buy in all-time highs or zones that are near the all-time high, because as you can see, this is a bullish momentum, but every time we got some retracement. So if you're not positioned yourself smarter or with a good margin management, you will be caught in the retracement before the price prints another all-time high. So this can be a safe area, but also it can get smoked if the retracement has very big wicks. So try to position yourself, but smart, and use, if you're using stop loss, try to use low lot sizes so you can hold bigger moves in case price, as mentioned, tries to deliver a retracement. And if you're a champ like me that is shorting all-time highs, well, that's up to you. Like, you need to have more margin efficiency. So I will suggest to just avoid this week, let the Friday do its move, and don't hold swaps. You can start Monday or Sunday. Next week, let's see what we have. Flash manufacturing, we will have action on Monday. Usually we start in the market open. Markets open are delivering um, a lot of gaps, so that's also not recommended if you are not having a very good um, position sizing, we could say. So if manufacturer keeps expansion above 50, it will be very good. And we have the final GDP and unemployment claims, so we can assume Thursday will be very spicy. So these two pieces of data on the same day will be very interesting. So this day we can make a lot of money. So for now will be it. Just have a good one.